Hello, this is Solomon Davis, Right Side Trader. Today is September 24th, 2023, and this is what's going to be kind of like weekly videos here on trading options. And all this is all for educational purposes only, no trade recommendations here. As we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other and make sure trading is something that is actually suitable for you. If you watch my other video today, on this video, I'm going to be talking about bullish trades, and the bullish trade that I'm going to be talking about is selling puts. First of all, what I want to look at, this is not a trade recommendation. First of all, what I'm trying to show you, when is a good time to sell a put, what it looks like on a chart when you want to sell a put, and this is just, in general, you can sell a put in the market at any time that you want, really, but the thing is, you want to try to put probability on your side, where when you do that, sell a put, that you're going to actually keep the credit that you receive. So what you're going to be looking for, in my opinion, not everybody's opinion, you want to be in a bull market if you're going to be doing a bullish trade. So how do you identify a bull market? You want to be in a market that is uptrending, in my opinion. Again, everybody has their own opinion when it's the ideal time to be doing different trades. In my opinion, the best time to be doing a bullish trade is in a bull market. The other thing that you want to look for is selling puts. You want to be selling puts when volatility is somewhat high. And that means when I say somewhat high, I'm going to do a separate video on how to look at volatility and all. Some platforms have it really nice for you when to look at volatility and all that, and which is great, but not all platforms. So I'm going to show you another way that you can go look around and see what does those volatility numbers mean and implied volatility numbers mean. If you was watching my last video, this is when I talked about buying calls, and the last part of that video was putting on an order cancel order type call trade. I am going to go ahead and cancel that trade to get it off the screen to get rid of the distraction. On this platform, this is the Thinkorswim, TD Ameritrade Thinkorswim platform. It's a very good platform to start off with because it's just that easy to cancel a trade and all. So that's why I like this platform. But when it comes to placing a bullish trade, one of the things that I pointed out on the other video, you start with the chart. You want to see what kind of market am I in. You want a bullish market, is going to be uptrending. How can you tell if it's uptrending? If you seem like you've made a bottom and you see confirmation of a bullish sign, a bullish pattern, and confirmation of that bullish pattern, it's maybe okay to do a bullish trade. Here's another bullish pattern and confirmation of that bullish pattern, and maybe it's okay to do a bullish trade. And then the next thing that in general, you want to make sure that you give yourself not as much time, because again, when you're selling something, time is what's going to be working for you more so than anything. Well, time and direction. So you have time and direction working for you on a put sell. When buying a call on a put sell, you're going to have time and plus direction, DIR, direction, I'll say just DIR, direction working for you. When you buying a call, really all you have is direction working for you. So that's why you hear a lot of people, they're really excited about, doing sell type trades. But you have the other downside about selling puts and all. Let's jump over to the trade tab. It is that, yes, your broker will allow you to sell puts, but in order to sell a put, you have to have, they're called cash secured puts, meaning that if anything goes wrong, you got the cash in your account to make that trade whole. And what does that mean? that means that you're willing, when you sell a put, what it means, it means that you're willing to buy 100 shares at the stock price that you sold that put at. Okay, what does that mean? Okay, what does that mean? I know people say they hear it, but a lot of times they don't really know what you're talking about. And in this particular case, I will bring up a spreadsheet. And this thing brought up, it brought up the wrong tool. Let me do this again. Where is my, let me just bring up a calculator. A calculator is good enough for what we're getting ready to do. Okay, so ideally, say I'm looking at the market that's going on right there. The market is trading at this 357 and all. This is not a trade recommendation. This is for educational purposes. I'm just trying to give you an example. Let's go back over to the chart. Let me go back over here to the chart. QQQ. QQQ right now is actually dropping. Say I was bullish on the Qs still, and I want to sell a put. I noticed one of the other things that you want to do when the market is volatility is high, you want to sell options. You start getting that itch to sell options. So now I'm looking for a place right now, not a trade, I have to say it, not a trade recommendation. This is just to demonstrate and show you what the risk is on this particular trade. Say you want to, I'm gonna look at two different points too. Say you say, I have this zone right here. I don't expect the market to drop below this area, but I know it can probably come down here and fill this gap right here. And this gap is really at 350, maybe even a little bit below 350. So I really probably, if I'm gonna sell, I probably should sell maybe at a 345. The market is dropping. I'm saying if this market, this is the mindset that you have to have. If this market comes all the way down here, I don't mind owning this stock at, we'll say 345 is going to be one of our strikes. 345 is going to be one of our strikes that I'm going to look at for selling a put, selling one put. Okay, but then I want to look at, okay, if this market really goes crazy and really drop, it can come all the way down here to my harder zone where this market really kind of based and went up, and not just this little gap here where it was gapping up and moving up. It may not be too much resistance here when this market starts dropping down here, but once it gets down here, it based here. This is a weekly chart. It based here for quite a bit of a time. So if it does come down to here, it may hang out here or it may reverse back down. So my other level that I'm gonna look at selling a put is 320. Let me see if I'm gonna go 320. Right at this level, at the bottom side of this zone right here that I identified. So 320. So when you're selling puts, this is one of the things that I do to help me decide what strike I want to sell at. Now, when it comes to time on me selling puts, I don't know I forget what I put on my thing. I might have said 40. I usually would say 45 days because that's what a lot of people like to look at. We're going to look at two different places. 45 days around there approximately, I'll say plus or minus 45 days, plus or minus I say 5 days, plus or minus 5, approximately somewhere in there. But me, I'm the type of guy, I want to sell it around 30 days. So we're going to look at both. Let's cross out the 45 and go with, these guys have done studies and they said 45 days is the place you should be at, and you're looking to make 50% of whatever profit you collect. So that's the whole put strategy that most people are looking at. So we're going to look at it that way, at two different strikes at that one time. So now let's go over to the chart. Let me just erase all this stuff that I wrote down here. It's probably a mass erase. I'm not used to using the tool, so I have to undo the click thingy. And let's look at our other thing here. Let me go back over here. Go here, trade tab, and this thing should. What is that? Is this my eraser? That's my eraser. There. Okay. So now, put, we said, I think see, I forget, I should have wrote it down. 320 was one of them, because I know that's a level down where I'm actually looking at. And that's the thing. And 320 in this level right here. We're gonna go with the 350. And nah, let's go at 345. I think that's what I had said before. All right. So now we want to go to the trade tab. We want to look at options around that time. See, again, you may have this 40 days, and I like giving it. That's why I said that plus or minus 5. I would probably jump out here to this 54 days and all. Now, the question is, you don't have to worry about, I do not concern myself about delta. I'm looking at the strike where I want to sell it at. I know traders, they want to sell at a 0.2 delta. They want to trade at a 0.1 delta. And they're trading different time frames though. Me, since I'm selling, just based on my price level, I'm not really that focused on the delta itself. So 345 was one of my numbers, and I'm not really focused on the dollar amount. I'm just, okay, this is the level that I want to be at, and this is the time that I want to be at. And I see, in order to, let me scroll out like here, I got to scroll all the way like this right here. So now the kicker is, in order for me to place this trade at $345 and collect, $5.90, I have to have in my account 345 times 100 equals, I have to have $3,400 in my account to make, and I'm really not looking to make this whole 500, say $600. I'm only looking to make half of that, $300. So I'm really only looking to make, what's that, 1%, on this trade. Yes, that's what it is. And that's what it is. So that's what ends up usually turning some people off on placing trades like this. So now think about it. Now if I'm down at this 320 thing, the other strike that I want to place, in order to do this trade, I need to have, you guessed it, clear, 320 times 100 equals, I need $32,000 in my account to make $200. Some people will say, I can do better than that with that kind of money. I want to use my money the best way possible to make money. Make a couple $100. I can probably do a day trade and make $200 and not wait 20 days, 25 days to make $200. So that's the downside of these trades. But people are doing these trades. As you can see, look out here at this 320 strike. There was over 1,400, contracts traded. There's the open interest at this level. There's over 10,000, contracts, open interest down here this far out, 54 days out. So people are placing these trades. Some maybe you got to have a buyer and a seller. So there are people selling out here, and there are people buying out here who's initiating those trades. So it is happening. So you might hear people saying, "Oh, that's not the best use of using their money," but they're probably the ones that are out here doing these trades, because the probability of them being wrong, is 11%. That's another way of actually looking at this delta. And that's why I say I know traders who this is where they trade at. They trade out here at this 0.1 delta. And at this 350 level, 345 level, I look at that. This is a 0.3 delta. Most of the guys that I know, they're down here usually 0.2 or 0.1 delta is where they're at, and when they're doing these type of trades. So this is what I'm trying to get here is the amount of cash that you need to have in your account. If you're trading a cash account, this is the amount that you're going to need in your account in order to place this trade. And a margin account, which we're trading in, we will see here in a sec how much it's going to say is required. So I'm going to place the 345 trade and let you see that. and see how it looks. So now, in order to sell a contract, you need to click on the bid. What I just did. Let me show you again. What I'm doing is clicking. I'm just doing a single click. That's a left click. I know people have asked me, you clicking the right button, the left button, the right button, or what button? It's a left click. I want to make sure that I'm only doing one contract. Delete that and make sure it's one and not 10. You can make your defaults, one contract or two contracts, however many contracts you want to do. I want to verify that I'm actually doing a single. I'm doing a sell. It's usually a red color. Make sure I'm trading the product that I'm trading. Make sure it's the correct date that I want to be trading, and I'll make sure it's a put. Make sure that the amount that I want to receive is correct. I'm going to change this to $6, and I can make this whatever I want. But if I want to be filled, I need to have it exactly what's at the bid. And I can put it anywhere between the bid and the X price, the bid and the X price, the bid and the X price here. I can place it anywhere in between there. Let me just kind of scroll to where we're at. We're at the 345 one right here. I clicked on the wrong thing. 345 one right there. And if something like that happens, I can go over here and I can switch that to a sell. I can switch that back to one. Verify my strikes. I can say 345 to show you different ways that you can do this. This is why this platform is probably the best platform, in my opinion, to start with. It's very easy to move around once you get used to it. It doesn't take the learning. There's a learning curve on whatever you're using, but this one right here, I think the learning curve is not that bad. And let's get back here where we're looking at what we want to look at. Boom. So these are the strikes. So now, one contract QQQ, 345 strike put. The price that we want to sell it at. I'm just changing this to show you that it can be changed if you want to change it. It's a limit order, good for the day and all. I do a confirm and send, and this is where, oh, this is good too. It shows you the maximum profit. Now on these trades, you don't have that infinite profit thing. The most that you can make on this trade is the credit that you receive minus the commissions that you're paying and all. So the most that you're going to make on this trade right now, the way we have it set, is $600. That's it. And it's going to take time for you to make that $600 based on how the market moves, based on how volatility comes in and out of the market in order for you to make this money. And direction that the market actually moves for you. Buying power effect. Right now, in a virtual account, as you can see, it's not that $30-some thousand that was this strike was. It's not that $34,000 that you required and all. In a margin account, this is one of the good things about margin accounts. They say, we know this trade is high, it's not likely to go against you. We see that you do have the money required to place the trade, but since you are in a margin account, what's all that's really required for you at this time to place this trade is just $5,800. That's it. And all. And as long as this trade keeps working in the direction that you want to go, this is not going to change that much. As long as volatility stays where that doesn't increase, as long as the market keeps going up or reverses and going up, is going down right now, this number will not change on you. So that's one of the things. That's the other reason that people look at doing these trades. Now, instead of being like that 1% trade that you was looking at, now it's getting closer to 10% trade, and that's a little bit better when most people, it's on 6,000, 5,000, but 10%. Is that right? It's 10%? 10%. Yep, it's about right, I think. Not doing the math real good right now. But that's about 10% on this particular trade right now. So, and I do a confirm and send, And this is what it looks like. It's a sell. It's a position waiting to be filled, and since it's above the market, it won't be filled. You know, the market has to actually go down in order for this price to go up and actually fills us. And now to close one of these trades, let's go into that. When you sell something, in order to close it, you need to buy it back. So now I should be able to click on this, create opposite order, the same way I did it last time, the first time on the call. We're doing the same thing again over here on our position. I'm right-clicking, bringing up this window, and I'm saying create opposite order, because the opposite order is the order that you're going to need in order to close this order. So I click on that. It brings up a buy ticket, one contract, the correct product, the correct expiration date, the correct strike, the correct type, and then all I need to do is change the price. If I'm selling something at a high price, I want to buy it back at a low price. So I would change this, and if I'm trying to buy it back at 50% of what I collected, that number will be $3. That's why I made it $6 to make my math easy. And you're going to want to set it as a good until cancel type order. Make sure, I go over this again, make sure it's a single, it's a buyback, make sure it's the same amount of contracts that you sold, you want to buy back, make sure you're looking at the correct product, make sure you're looking at the correct expiration date, make sure you're looking at the correct strike, make sure it is a put, you didn't make some kind of mistake there, make sure you input in the correct price that you want to buy it back at, make sure it's a limit order, and I'll verify your limit, your order type. Change this from day to good until cancel, and leave it at the best exchange. Let your broker handle that for you. Once all that looks correct, do your confirm and send. It's going to bring up a confirmation dialog again. It's going to tell you, now buying this put, now it tells you your maximum. See, now this is the thing, yeah, this is kind of cool. When you're buying that put, it tells you your maximum profit is $34,000. It's $34,000, 200. It's $300 shy of the strike that you actually sold, because you spent, $300. So it's going to take $300 from that, and that's if this price goes, this thing goes to zero. That's the way you're going to make maximum money. If QQQ ends up going to zero, you're probably not going to need any money. Joke. But that's it. And people look at that. This is probably not going to happen. But in the market, anything can happen. As you can see, you end up getting money back into your account. This number should actually goes up. Well, it should have took $300, because the money that you're spending, the way this thing looks at it, is $300. Although this is the money that you actually really giving back to the market, because you collected $600 and you giving $300 of that money back into the market and all. So that's all you're really getting out of this. Hope that is clear. This whole thing about puts and put selling can get kind of confusing, but it's pretty straightforward. And doing it in a margin account, a lot of people like doing them in margin accounts. Me, I prefer not to. I would do this trade only if I have the cash in my account to cover the trade. Meaning that in order to place this trade, I would have to have $34,500 in my account for each contract. For each contract that I want to sell. So if I want to sell 2 contracts, I better have $6,800, $68,000 in my, maybe almost $70,000 in my account, $69,000 in my account in order to sell 2 contracts and only make $600. So that's the thing. When it comes to selling puts, I always say, even if you're in a margin account, it's probably best not to start with a margin account. Start with a cash account. You better have the money in your account to cover the trade that you're actually placing and all. Or they will be coming after you probably. I don't know what they would do. You hear some real bad stories about these trades going against you really bad, and you've traded too big. So that's the whole scary part about options. Never, 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 never trade any more than the money that you have in your account to cover worst case. Although we don't expect worst case, and like you were saying, we was looking at these trades, and I'll do a confirm and send on this, and this is how this would look. Is you have a buy order and a sell order out there. The scary thing about I say never, 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 never place your closing order until your order has filled, then place your closing order, because I've had it on platform when you have both of these orders out here. Some platforms will go ahead and say, oh, I can get you a better price than what you're trying to do, and fill that order for you. So always be careful about that. Place them one at a time. And I will show you, just like I'm going to go on this platform, in order to cancel the order right here, I can just click cancel and cancel my orders. Click cancel. I'm really going to right click and say cancel. And on the first time, I just selected the orders that I want to cancel, and I canceled them. The other thing, just like I showed on the other platform, if I want to do that with an order cancel order, I can do a sell custom with order cancel order bracket and all. And it sets up one sell order and two buy orders. One of them is a stop. If the thing starts going down and the price of that option starts going up, it'll get me $1 higher than where I actually sold it at to get me out of the market and all. If it starts going, the market starts going up and my option price starts going down, that's me making money, and I sold it at a high price and I can buy it back at a lower price. I can change these numbers to whatever I want. Say like I wanted this to be $3, not $300, $3 for my closing. And let's say this right here, I will leave it at that $1. And I need to remember to change my number of contracts. And I'll make sure that is correct on each one of these. And these orders, as like I said on the last video, I would definitely practice these in the paper account first. And I definitely would do these in an area where if something goes wrong, it won't hurt me, meaning it won't be a big financial impact on my account. Definitely less than $100 if I do something like this and it doesn't work the way I expect it to work. I would also probably check with my support and ask them if this is working, if all these cancel order things are working right, because I've had problems with them before where orders wouldn't execute the way you would expect them to execute, and you run into all kind of problems and stuff. So do a confirm and send. I'm looking at how much I'm actually selling it for, how much I really want to close it for a profit, and how much I really want to close it for a small loss. It gives you information here letting you know the credit that you receive, what it's going to cost you to get out of these trades also. This is not exactly correct because it is not taken in consideration with the numbers that you actually put in here that I can see right now. But I can do a confirm and send on this, and then it's got as you can see, this one right away, it has your buy order and your sell orders out there in the market. And if we go back to the chart, you will see what you saw before, but the colors have just switched around. We're selling something and we're trying to buy something back. If the market if we sell something here in the middle of the market and the market starts going down, it will stop us out. If the market starts going up, it will pull us out of the market also for profit. And that's all I really want to share. I hope this is being helpful. Like I say, I got to make a video on volatility, and I also want to do one on bearish stuff, but implied. I'm just making a note in my book. Vega IV. I would get some notes on that. And one of my next videos is going to be all about volatility in Vega. I hope this has been helpful. This is all I'm going to do here right now. I hope subscribe, and do some likes. Throw some questions at me if you have any questions about what's going on. If you wanted me to do something a little bit different, and just let me know, and I'll see what I can do. This is Solomon, Right Side Trader. You guys have a great day. Hope you guys had a great weekend, and I'll talk to you later. Bye.